What's up, everybody? Real Trader Joe here with another episode of the show. It is 8/22/2024, slightly after the market open, and you got a glimpse of my profit and loss there. Profitable for the year, but just barely, and really nothing going on as opposed to yesterday. We got a little bit of VIX contraction. VIX still high historically, 16, still pretty high VIX for historical levels, so volatility elevated just a little bit in the grand scheme of things. As we go into November, I imagine that is going to increase, but markets today, you got NQ up about a third of a percent, ES up 18 points. Markets kind of taking a break here after this recent rally. Still have not tested the highs here reached by 5,700. So I'll be curious to see if this rally continues or whether or not it's exhausted itself. After so many up days, you'd think you'd have a break here, but look at this, Palo Alto, well outside of the 370 range. Again, not great for us overall. It's off its highs of about 375, but a little bit of a pullback after an earnings move like that is to be expected. Micron and Dell, totally where we need them to be. Micron, we're a little short, but you know what? With 15 and 11 theta per day, respectively, on these options, gonna again just be looking to scratch out here. The rest of the portfolio suffering a little bit. VST in between our short strangle still, but we're a little short VST now. With all the price action we've endured, we had to make the adjustments, and I don't feel guilty about it. XBI settling nicely within our inverted strangle here, and we'll be looking to take that guy off here in the next coming days. Up 99 bucks today. Wow, almost even on this trade. Look at all the price action we've endured over the course of this trade. I mean, we put this on in March. So we put this on right as the end of the rallying kind of came to a head here, and we've endured all that movement. So going to be really happy if we can get out of that one for a win. AMD, looks like our 135 short put has come to roost. We could close that, and we would effectively be left with the 144, 165 strangle. I think I'm actually kind of okay with that idea. The original trade was 135, 165, and we sold the 144 to pump the brakes. We could close that 135, and then we'd essentially be left with an adjusted strangle, having rolled this up to 144. So there are a couple different ways we can go about this, but I am more than happy to just keep taking the theta. No show tomorrow, by the way, guys. I will be out of town, so no show tomorrow, possibly no show Monday, but QQQ, it is time to make another adjustment. So like I said, if we breach that 483 strike, then we'll continue rolling the untested side, and we're going to do just that. We're going to yank this 459 put up to 466 seems okay. I don't want to get too trigger happy, just because September is kind of historically a weaker month for the stock market. 73, yeah, we're kind of scrounging for premium here. Let's see, our cost basis on QQQ right now. Let's look at what we have open. Yeah, so we have open a cost basis of about $6 and change, 10 total, but that's our put and our call. So so we have quite a bit of cost basis to work with here, because we sold this call, this 479.78 for $3. It's now worth well more than that at $14, a whopping $14, I might add. But yeah, this short put has also performed wonderfully here, giving us a cost basis of about 7 option dollars. So we have 10 option dollars on this trade in total, and having seen that, and we'll take all that off so you can see here a cost basis of 10. So with this roll that we've done the other day, that is quite the cost basis. I mean, we are looking at being profitable up until about 489 even. And I'm curious to see, yeah, the analysis changed a little bit off, but we're we're profitable till 489 for sure, because we do have a cost basis of about $10, and that's including the call that we made and the short put that we've rolled. So just to give you an idea of the market state snapshot, we placed this trade. We placed this QQQ. It was actually a short call that we then turned into a short put. Excuse me, I might have misspoke earlier, but yeah, it was a short call that we turned into a short put. So you can see here, if we just left the short call on, we'd be down about $1,000. This rally has really been something. And the short put that we've put on has soaked up about 400 of that, so we're left with this. But still, I mean, this short call was worth $3. The short put, with all the rolling that we've done and all the adjusting that we've done, has put us at about $6, almost $7 in cost basis. So 7 plus 3 is 10. That's how you get that number right there. What that means is we are not officially in the hole until about 489. So I think that we can let this guy be. If we get up to about 50 delta, I may roll a little bit more, but I really just want to stick to the mechanics here. And I think if we're not in danger, right, if we've collected money on this trade, we've only been in this trade for about a couple weeks, and it looks grim right now, but we have collected a lot of movement here, and you can see the Qs themselves. I mean, 10 points in a day on a big rally is from 475 to 481, so that's 6 points. So it very well could keep rallying 6 points a day, but this is a lot of movement. I mean, we put the trade on way down here when the Qs opened and closed with a 20-point movement. So that's pretty crazy to me. And I think we'll just go ahead and leave this guy on. We'll go ahead and we'll leave him on. We're not going to touch him just yet, but we are going to unwind. And we'll see. The plan here is to unwind a little bit closer to election time, right? So right now, we're using about 63% buying power, down yesterday from 70. I did go ahead and take off that Coinbase short put that we had. I just, decided to bag the profit. It was using about 6K in capital. And again, this is a defined risk trade. So with Coinbase, you can see here we have a cost basis of about 12 on that diagonal spread, which is about 1.5%. For defined risk trades, that's well within the expected risk parameters that you would take for defined risk. But we've managed to reduce that cost basis even further by, an additional $2 or $3 here just from closing some short puts and profit and stuff like that. So this cost basis of $12.39 with the closed trade that we have, you can reduce that to about $9, which is pretty good for a 20-point wide defined risk strategy. I'm happy to, let dragons lie where they lie, and if that doesn't work out, it doesn't work out. But in hindsight, I think if I'm going to be short the indices, you might want to be bullish on Coinbase. It is correlated to Bitcoin, so we are going to be down overall. Mainly because, again, Palo Alto kind of carrying the portfolio here. But, again, I'm happy with the theta numbers. I'm happy with, even our percentage of profits. Our worst one is the Coinbase trade. Qs, 40% chance to be profitable by expiration. But remember, this is the entirety of the profit. So we're not looking for the entirety of the profit. We're looking for the P50 metric, which is about 50% of that. So if QQQ hits 489, we will make our adjustments then, but until then, we're going to give this some breathing room, especially with the election coming up. Look at this graph here. So right now we're down about $1,100. If we let this come back, we'll be down about 700. And remember, options are a game of, at least from the short side, limited profitability and theoretically unlimited risk. So, it does look kind of risky here, but, you fast forward this enough to about 9 days to go, 10 days to go, and we're in the green. So, we'll obviously adjust the position before then. We'll adjust it around 21 days to go. But even at 21 days to go, we'll be about $300 for the better if QQQ stays where it is. So I'm not worried about that, even though that is one of the bigger losses on the portfolio. Nothing in here is of supreme concern to me. ARM is looking like it's right where we need it to be here. 23 theta a day on that. So, we have a few trades in the 29 DCE cycle. The Qs are in the 29 day to go, ARM's 29 days to go, and AMD's 29 days to go. So we're looking to unwind hopefully some potential winners here shortly. And right now I'm just sort of in risk management mode, sort of just controlling things and letting them sit, without doing too much. Sometimes, especially close to an election cycle, you definitely don't want to be on the wrong side of the market when it moves closer to the election. You can see the volatility here leading up to and just after the election for November 15th. This is on AMD, but I bet you if we go to the indexes, we'll see the same thing. So QQQ, 21, 23. So November and just after has an elevated implied volatility of about 2%. So that election volatility is being baked into the November cycle, and that's something we're going to want to look out for. As we continue to head up to election, I probably will trim the portfolio just a little bit. No new trades today, but if you guys have any questions, I'd be happy to answer those. I'm going to go ahead and get my question form ready, see if anybody has said hello today. If not, that's cool. No big deal. I will be here. Like I said, no show Monday because I will be out of town at that point. But, no show tomorrow. There will be a show Monday, no show tomorrow because I'll be gone. I won't be here. But that's all right. So, let's see. What else is on the radar from a volatility perspective? So, the markets are pretty neutral. Let's go to the top traded equities. Oh, for the first hour, they may not be there. Let's go to Tasty IVR, so Ivy rank. Lululemon, does that have earnings? Yeah, it does. 29, so I don't know. We could get cute and do something in Lululemon, but again, the goal here is risk management. Dollar General, MDB, MongoDB. I have not ever traded MongoDB. I'm surprised that it's at 257. Wow, jeez. And then, Kroger earnings here shortly as well. So all the high IVR stocks gearing up for earnings. I don't think we're going to do anything just yet. We'll go into the default watch list, sort by IV, see what's popping. Gold, I think, has just been on an absolute tear. Yeah, look at that. That's really interesting. So gold has continued to rally also. That's pretty rare. You usually don't see gold rally with the equities. That actually may indicate an interesting level of risk to me also, because usually gold and equities have either a non-correlated or an inversely correlated relationship. The reason being that if people are buying gold, if they're taking their money and putting it into gold, they're usually selling stock, equities, or futures or whatever. So that's interesting to see. The gold has had this tear as well. In comparison to the indices. That's something to keep an eye on as we head into the election. That's a pretty bearish signal to me, a rally in gold. And given the fact that we have not yet retraced the previous highs, my suspicion is that we have a lower high, and that we're going into a bearish trend. But what do I know? I've been bearish all year. Hasn't really worked out that well. So, is this just confirmation bias? Is this just me saying now's the time? That could very well be. I have been eyeing some QQQ puts at about the expected move, the 450 strike. The reason being I want to capitalize on this low IVR, and with the election coming around, the expected move may increase, and we may be able to profit off of this volatility here. Look at this, an 89% chance to be profitable if we short these puts. If we go long the puts, though, we still have a P50 of about 60%, which is not bad. So that's an interesting stat to me. I mean, what if we did like a diagonal here? Yeah, it doesn't change the numbers too much to do a vertical or diagonal spread. But those are options that I'm keeping an eye on. 85 days to go. maybe I can go out into December. I'm already short the Qs, so I don't want to add to my existing short position in the event that we're wrong. I don't want to lose more money. So we'll kind of wait on that one, but I've been eyeing some downward protection because make no mistake, we are still exposed to the downside. We have short puts in AMD. We have a short put in Coinbase that's not going to matter. We've got short puts in ARM. There are short puts in this portfolio, and if the market goes down, even though we are bearish right now, we are not going to be bearish forever. The deltas of the portfolio will change, so that is something to keep an eye on. But I don't have any trades lined up for you guys, and looks like it's pretty quiet out there, so I'll go ahead and end the stream early. If you guys have other content that you want to see or have questions, you can always email me at traderjoegoro@gmail.com. That's traderjoe, all one word, Goro, Goro @gmail.com. Thanks, and I'll see you guys next time.